Next up, we've got a question from Christian. It says, as a self-employed single member LLC, what are the best available options for me for retirement? I have a Roth IRA I maximize, but what are more available options in this scenario?
So Brian, you and I, we've been hanging out for a long time. And I know that one of the things that you used to always say early on in our relationship is you're like, man, if I can just get a hold of a business owner, if I have a small business owner and I can just show them how we could save them some money in taxes, a little bit of planning go a long way. I know that I can, this is back when you're an accountant. I mean, I guess technically you're still an accountant, but this is back when you did tax returns. You're like, they'll be a client forever. They'll hang out with me forever because I know I can show them that. That's exactly where Christian is. It sounds like single member LLC, right? So there's some options there. And maxing out Roth. So it sounds like he has now gotten past the like, can I keep the lights on position? He's in the, how can I start saving for the future? And so maybe even thinking about how can I start decreasing my tax bill? What are the best tools available?
Well, it's interesting because we're recording this in January of 2024. So I'm going to give a little history. In the past, it was easy for me. Now I'm going to assume, because he said a single member LLC. So it's kind of a newer company. It doesn't probably have it doesn't have any employees. I'm going to assume that it's kind of a sole proprietor type thing. Because that's when you're a single member LLC, you're typically just filing a Schedule C on your individual tax return. It's when you start getting bigger that you do subchapter S's or add-on. And that doesn't mean that you can't have a single member LLC with employees, but I'm just making some assumptions because that's what we have to do on a show like this. But Christian, in the past, it was easy to say, go open up a SEP IRA because a SEP IRA is going to let you fund 20 to 25% of your business's earnings. And since you're a single member LLC, typically 100% of the profit is going to be subject to self-employment taxes. So that means that really the profit of your company, you could fund 20 to 25% towards that SEP IRA. Well, then fast forward, I guess it's probably a decade now. We're getting close to a decade. The government added solo 401ks, which were just like SEP IRAs, except for the fact that they also now added you can make contributions. You can make salary deferrals. And I already said, because you're a single member LLC and everything's subject to self-employment taxes, you could make your annual contributions right off of those earnings. So that's when now our default usually is for tell people a solo 401k. Now you have a time component that just because, like I said, we're filming this in January of 2024, you might have had a better 2023, maybe that Santa Claus rally, or you had a big windfall that came in the fourth quarter of 2023. They're like, man, 2023 turned out to be a better year than I thought it was going to be. Is there a way I can go fund backwards to lower my 2023 income without a DeLorean and without driving up to 88 miles per hour? And the answer is yes. You can right now go set up that SEP IRA for 2023. But I would say for this year, 2024 and beyond, I think you're a great candidate, sounds like, for like a solo 401k. So you can do, because just when you do the SEP IRA, do a prior year contribution. You have until the actual deadline of filing the taxes. And if you file an extension, you can even go all the way out to the extension deadline, do the SEP, and then do a solo for 2024. And you can really load up these retirement accounts. Now, I will tell you the caveat. As soon as you have employees, you're probably going to have to flip the switch to go to a more traditional 401k. The good news is they've made these so much more cheaper to go out there and from a compliance standpoint, administration, it's not so tedious. It's probably going to cost you a few $1,000s a year, but the tax benefits as well as the opportunity for you and your employees is worth it. But do the steps I talked about if you don't have any other employees except for maybe you and your spouse. As soon as you add employees, you're probably going to go traditional.